Dear friends, I wish you a very happy Diwali. Diwali is the time to sit back and reflect at the year gone by, how you feel right now, and how does one look at the year ahead. The year gone by has been a tumultuous year, particularly for India and the Indian economy. We have seen pretty significant changes in foreign exchange rates, in interest rates, in equity markets. We have all lived through a new concept which happens in the US and can affect the rest of the world, including India, called taper. And that happened in May, and everybody around the world shivered. We saw our rupee dollar move from a level of around 55 to 69, and we are currently at about 61, 62. So a lot of hitch or movement up and down, or volatility as we call in financial markets, is something we Indians have lived through over the last 12 months. At this point of time, I do believe that a lot of the pain has happened in the real economy. The economy, I believe, is currently growing at the rate of 4 to 4.5%. But the good news on the US taper side now at this stage is it is likely to be postponed to March, April. Along with that, we have seen a series of measures on the policy side taken by the Indian policymakers, including by the RBI, which has brought a certain level of stability to the Indian economy. With the progress of monsoons and therefore good agriculture, combined with stability in the foreign exchange and the financial markets, I do feel we are close to or at a bottoming out of the Indian economy. So from this level of around 4 to 4.5% growth, I see a gradual pickup of the Indian economy going forward. As I mentioned, it is not a sharp V, but a gradual upward shaping L as I look at in terms of the GDP growth. India for the next 12 months to 18 months should be happy if we grow at an annualized rate of around 5 to 5.5%. This gives us the ability of taking corrective steps on the real economy. And along with that, as the GDP growth gets better, I feel cautiously optimistic about the future of capital markets. I do believe that the savers and investors in India have gone through a lot of pain. People have put a lot of money in the last 1 or 2 years in gold and real estate. Time now is back to financial savings. We are seeing a growth in bank deposits, and I would like to believe over the next 12 months there will be some return to equities as a financial savings instrument. I have believed that long-term asset appreciation in financial savings comes primarily from equities. Therefore, the year ahead, with the steps being taken both domestically and globally, in my view, gives a positive inclination to me in terms of how equity markets will shape up from here. I would increase my allocation to equities as an asset class compared to earlier periods, though moderately. At the same time, I do believe that the time has come for investors and savers in general to start looking at equity-oriented instruments, whether it is equity mutual funds, high-quality shares of Indian companies, but in a very selective and focused manner. And this year, I do expect that from here, Diwali to Diwali, we should see reasonable appreciation around the mid-teens in terms of equity appreciation for the right quality stocks. I wish each and every one of you, whether you are stakeholders at Kotak, savers, investors, to have a good year ahead with lots of things happening, including on Indian politics. And on politics, my view is the Indian voter is a smart voter. He or she will produce a stable government post-April. And for that, also watch out for the state elections in November and December, which will be harbingers to what one can expect in the national elections thereafter. So, if we get a stable government in the next 5 years, and if the economy is close to bottoming out with a gradual upward shaping L, financial stability has come to play, I am cautiously optimistic about the Indian economy and Indian equity markets. I take this opportunity to wish each one of you personally a wonderful new year ahead. Thank you very much.